learning U.S. history.
So, I guess if you want to tell the audience a little bit about yourself, that'd be cool.
Yeah, I'm a accidental economist. I started taking economics in school because I liked cycles and stuff when I was young, but economics was useless. I mean, I couldn't find anything useful, so I ended up listening to my father's business friends and taking accounting and finance. Then I went to Harvard Business School and took marketing and business strategy and basically studied everything in business. And ended up coming up after that in research, especially for my new venture clients. I consulted the Bain and Company to Fortune 100 companies for the first few years of my career, but I learned the most when I started consulting to entrepreneurial companies when I moved to California, because entrepreneurs are always seeing and creating the future. And I found out myself, I'm an entrepreneur. I didn't see myself as an entrepreneur back then. So I created a whole new set of economic indicators that revolve around people and technologies, for crying out loud, and not central banks and government policies and stuff, which all
Do you
have their
tell
impact.
people what the indicators are, or are they proprietary?
Yeah, no, I mean, the first breakthrough I got was in 1988. I already had it, but I didn't have it crystallized. A 46-year lag on the birth index in any developed country, adjusted for immigration, which I have to do in the US and countries with high immigration, for the peak in spending. Age 46 is the peak in spending of the average person in this country. It's now 47. Back then, in the 80s, was 46. That told me that Japan was about to collapse. In the 90s, US and Europe were going to have a much greater boom when everybody thought they were has been. I mean, it just changed my perspective on everything, because the baby boom, the largest generation in history, was just entering the workforce in the early 80s in mass, and we're going to cause this very predictable boom that nobody saw. So that was my first breakthrough. And literally within a year of that, I figured out, oh, guess what? Inflation, of all things, is also caused by people, because young people are the most expensive people in our economy. The cost to raise them, incorporate them in the workforce, educate them, all this other stuff. So I found that labor force entry was the greatest generator of inflation, something no economist would ever even think possible, and it works like a charm. So those two indicators allow me to generate a 4-season cycle of booms and busts and generations of modestly rising inflation, then high inflation, and that occurred with the baby boomers' peak workforce entry in 1980, and then falling inflation, a fall bubble boom, and then a winter season, which we've been in since 2008. You just wouldn't know it because they printed so much money to cover it up. So I think what I'm saying is we're going to know it soon. That they put off the 2008 crisis was the beginning of the winter season, like 29 to 32 was back then in the 30s, and should have been, but they decided to stop it and print money, stop the debt deleveraging, all the normal things that happen in winter, to make us more efficient again and get all the excesses of a bubble out of our economy. Now we're in an even bigger bubble that's going to crash even bigger. For people who want to know more, at harrydent.com, I've got a free weekly newsletter so people can get to know me better, because I'm telling you, everything I say goes counter to economics and counter what economists are saying, and counter to what people are saying now. But the truth is, I'm the only, I think, the only objective person out there, because I'm not in the economics profession, and I'm not. I'm, I have my own newsletter, my own business, and I don't behold to anybody, and I can just say what I want. No, but nobody in Wall Street can actually say what they want if they want to. So that's where I come from. Whole new
So
indicators.
have
They're
you
all about people, which means people like you can understand them.
well, I'm able to understand a lot of pretty cool stuff. Have you ever got one of these predictions right in the past? I mean, if they put you on TV, I assume so.
Yeah. I mean, the big ones, we've nailed almost all of them. My biggest problem, Richard, to be very honest, since they started printing money nonstop in late 2008, and basically the central banks took over the economy and just blasted out the natural cycles, it's been much harder for me. I'm only kind of catching up now to how to incorporate all this stimulus and measure when it's having diminishing returns. But The biggest calls I made were in the late 80s, 1989. I came in my first book and said, Japan is going to collapse in the 90s. And back then, Japan looked like China today. The up and coming country could do no wrong. They were urbanizing. They were catching up, taking over US and European industries. And just, and I said, no, I'm sorry. They're at the peak of their demographic wave, the baby boom there, which came earlier. And the US and Europe are just getting into it. So we're going to have the big boom in the 90s and they're going to collapse.
Right.
And I was predicting a Dow of 10,000 by 2000. And that's when it was 2,000 to 3,000. And people said, Harry, you are a certified nut.
So
that was the first big one.
So I think the two most productive things I could do is one, try and tease out why you think everything's going to crash. And then I'll play devil's advocate. I think that's the best way to go. So, let's assume everything that you say is right for fun, and the stock market's going to drop 80 or 90%. I've heard you say, or at least I've seen in the titles of other videos that you've been on, that you say Bitcoin's going to go to zero.
No, not to zero. Now, I look at Bitcoin differently than most people. It is not an inflation hedge. You want an inflation hedge, get gold. And inflation is the wrong thing to hedge against in this winter season, by the way, which is deflationary. It is not a safe haven. You want a safe haven? Buy a 30-year treasury bond that will not default no matter what and will benefit from deflation and falling interest rates. What Bitcoin is, much more important, it's the harbinger of a whole new technology cycle, which I call it Internet 2.0. Internet was the first cycle for how to distribute information bottoms up around the world efficiently. Bitcoin and blockchain, more importantly, are about the digitization of all financial assets and money. That is more important than information, if you can calculate it, especially in monetary terms. So I see it in its early stages, like the dot-coms. Why do I think Bitcoin's going to crash? Because it's bubbled up out of nothing and it's not really worth that much yet. But it is the potential standard for a whole new digital blockchain version of money and a whole different way of valuing and monitoring and trading and dealing with financial assets, which everybody has to do. And so it is the next big thing. I see it literally, Richard, following the internet, the dot-com surges, which bubbled up into early 2000, crashed, including Amazon. You see Amazon today, right? Is it a great company? Does it dominate the world? It was a new emerging company. It bubbled up to 136 from 6 in that bubble and then crashed 95% back to 6. Now it's at 3,500 or whatever, okay? I see Bitcoin and blockchain on that same trajectory, early stage bubble, which, by the way, for me, confirms this is the next big thing. Biotech and other major new technology, look at 3D printing, just name them all. None of them has bubbled like Bitcoin and blockchain. Only the internet and dot-com stocks bubbled that much, which was saying they were the next big thing. What most people didn't expect, if you don't study cycles like me and technologies and how they merge, is that first bubble will get overvalued tremendously because people see the future and not realize it's going to take 10 to 20 years to get there. So I think Bitcoin's about to crash back to maybe 3, 4, 5,000 and then go to 500,000 or more. That's what I see.
I would say that historically, every 10 years or so, you get a dip in the stock market, and cycles do exist. But those cycles,
every 40 years, you get much bigger ones. Look at that one. Even more clear.
Which is also why you get the rioting in the streets as well, because the kids forget how shitty things can be, whereas the people that have been to war enjoy their peace a little bit more than those that have never seen it get bad. So I understand the super cycles concept and the generational effect that is, wrought upon the economy. So the problem I have with bears in general is that, one, they're all extinct. The only people that have made it in the market.
Exactly. That's why you should listen to the last few standing. That's exactly what bubbles do. Extinguish all the bears till there's not one left, and then they crash and take everybody down in the Titanic. That's exactly the insight. You wouldn't expect many bears to be surviving at this point. If you did, you'd be saying the bubble's not over yet, if you understand bubbles.
Well, the thing is, So everything that you're saying can be, you're not trading markets against a real currency. You're trading markets against a fake currency, which is backed by nothing. Because the trading pair that you're
And
trading,
Bitcoin is backed by what? What is Bitcoin backed by?
well, the same thing that all the other
You're
markets are
saying
by,
that's a
the
true
greater
currency,
fool.
right? I'm
No,
assuming.
no,
What's
they're
it
all,
backed by? It's an invisible coin backed by not even
yes, just like
gold
the
has
dollar.
some intrinsic value.
Well, gold is down from 10 years ago today.
Yeah, and I've been predicting that, by the way. I'm a gold bear.
Okay. Well, then you got wrecked this year, but it's back down from 10 years ago.
I
I
don't
mean, it's
predict it
up
every day,
50% this
Richard.
year.
Don't hold
No,
me
but
to
this year.
stupid stuff. Like, don't even think of saying something stupid like that to me. Doesn't mean I'm bearish every week, every month.
Well, just tell me your time
I've been
frames and I'll use
telling
your
gold,
time
people
frames.
say gold, they think we're going to have an inflation crisis out of printing endless money. And I'm saying no. The printing is to offset deflation, and gold is an inflation hedge, not a deflation hedge. That's why I'm bearish on gold, and gold is going to go lower in the next few years. Mark
So,
my words on that. That's what I'll leave it at.
sure. Like I think Warren Buffett gets a lot of things right. And one of the things that he gets
Like
right,
what? Like
well,
what?
he's occasionally the richest guy in the world, which isn't
Yeah,
too
he
bad.
started investing in 74 and a nutless monkey. I hate to say it, could have made almost as much money if you started then.
But no one did. I mean,
That was at
he
the bottom of the stock market of our entire lifetimes. Whoever started there, which he did, that's when he really started investing seriously, would have done very, very well just with any bullish bias. I'm
it's
not saying he's
it's
a good
not
investor,
he
but I
doubled
don't
the
say he's the fountain of wisdom. I don't think he understands anything about economics.